Chinese stocks just had their best day in months. Meanwhile, Apple signed a chip deal bigger than most countries' defense budgets. 2 stories, 1 session. Welcome to Stock Tales. Story 1. Alibaba, up 11% in a single day. An $80 billion name moving double digits. Here is what happened. Alibaba reported cloud revenue growing roughly 45% year over year. The street expected 35 to 38%. That is not a beat. That is a recalibration. Real revenue acceleration, not policy hype or short-covering panic. The volume confirms it. Nearly 39 million shares, almost 4 times average. Institutions were buying with size. But look at the daily chart. BABA closed at $109, and it is still sitting below the long-term trend line at $130 and the medium-term line at $120, resting directly on the lower rail around $108. That is a violent relief rally inside a multi-year downtrend, not a breakout. The hourly frame tells a different story though. Price bottomed at $91.89 in late June, carved a base, then ripped through all 3 trend lines. Short-term near $102, medium-term near $102.50, long-term near $111, in one compressed surge. Those lines had squeezed into a $9 window. Price cleared everyone and is now pressing the long-term trend from underneath. Here is how I would trade it. The cloud numbers are legit. The institutional volume is legit. But structural damage from a 5-year decline does not heal in one session. Respect the momentum, but do not chase $109 into vacuum. A pullback to the $103 to $105 zone where the short and medium lines are stacked. That is your entry. Stop under $98. Target $120 on a medium-term break, then $130 if the long-term line cracks. Story 2. Apple. While everyone stared at Chinese ADRs, Apple quietly inked the most consequential chip deal of this decade. Roughly $30 billion plus with Broadcom over multiple years. Custom silicon, AI server chips, data center infrastructure. This stopped being about iPhone components. Apple is building its own AI kingdom from the ground up. The daily chart makes it obvious. Price at $313, holding above the short-term trend at $307, your floor. Above the medium term at $296, your conviction level. The long-term down at $280 barely registers. What matters is price pressing against the upper rail around $315. The only barrier between here and uncharted territory. The hourly frame shows why you wait for pullbacks. All 3 trend lines squeezed into a tiny $1.50 window between $312 and $314. Price tagged $317, then eased back to $310.66, sitting just under that confluence. Normal behavior after a run. If you are not in yet, the 308 to 310 area, right around that short-term trend line at 307 is where you build a position. Stop under 299. Target 320 on an upper rail breakout, then 330 plus on momentum. 2 stories from one Wednesday. One fighting to prove the narrative is not dead. Another laying the foundation for the next decade of compute. The question is not which story is better, it is which risk profile fits your account. That is Stock Tales. Subscribe. Trade what you see.